Welcome back. You're still tuned in to Halftime Report. Let's get a conversation going on with the management of Signature Global. Rajat Kathuria, the CEO of the company, is joining us now. We'll discuss the three focal points. The fact that what's happening in the residential real estate, with geographies are impacted. Is it impacting their real estate strategy when it comes to the residential segment? And of course, the foray that the company got into commercial real estate with their partnership with RMZ. So we'll discuss that and a lot more. Rajat, good afternoon. Thank you so much for joining in. It's an interesting foray that you've made, but I have to speak to you about the residential bid, because that is something that led to that fall in the real estate pack and stock markets overall. Your admission to the fact that there has been a demand slowdown, you'll not be able to meet your FY26 bookings guidance. Tell us what is happening here. Is it a specific geography? What are the issues? Is it in a particular segment? And what makes you believe that you'll not be able to get that level of bookings guidance that you had given earlier?
Sure. So thanks for inviting us to your show today. And see, as far as the housing business is concerned, you need to look at the trend over the last 3 to 4 years. So back in year, 2022, maybe fiscal year 22, we were achieving a pre-sales of about 2,600 odd crores. That number grew to close, or rather, somewhere above 10,000 crores in FY25. So we witnessed almost like a 60% sales CAGR over these, last 3 to 4 years. So all what we said for the current year, and we preempted the market, was that, see, I think the housing demand looks good, but to achieve, a growth of another 20-25% this year, seems a little challenging. And hence, we may stay range bound as well as, housing sales for this particular year is concerned. So, that is what, we try to, preempt the market about the current year sales.
Okay. So Rajat, hi, welcome to the show. This is Ekta. What you're saying is that demand has not really been affected. It's just basically the fact that you've sold a large amount, you're sitting on a high base in terms of numbers, and hence you might not be able to repeat that kind of, intensity in terms of growth. Is that what you're saying, that demand remains unaffected, or is there a slowdown in demand?
So Ekta, you're correct in this understanding that demand stays strong. But yes, I think given that we've grown phenomenally over the last 3 to 4 years, so this year maybe a little bit of pause in terms of further growth. But, if you're achieving numbers close to, let's say, what we achieved last year, I think it demonstrates that, the demand is quite steady.
So demand, you're saying, is quite steady. Rajat, good afternoon. Vinny joining in the conversation as well. Which price segments are you seeing maybe a bit of a slowdown? Is it at one point of time you'd seen those high-end, more luxury side demand continuing to stay strong? Has that continued? Has that seen a bit of a slowdown? Overall, if you talk to us about the segment-wise as well in terms of pricing.
Sure. So, Vinny, you can broadly look at market in 3 segments, and only 2 are active at this point in time. So I would like to carve out affordable housing because, in city centers, the way the land prices have behaved over the last, few years, I don't think it's a viable business to do, very low ticket housing. And we are governed with the land prices in the city. Talking about mid-income, all luxury segments, our clear focus is the mid-income housing segment. Now, that's a bit of a, relative definition, which will vary depending on geography, depending on, product positioning. But, we've by and large been doing products which started about, 2 odd crores and going up to about, 4 odd crores. So that's what, we are targeting. And our intent has been to do a quick launch, quick sale, and quick development, model. So the idea is to stay, asset-wise, we want to develop, these projects on the land which is owned by us, but we do not want or like to pile up a lot of, debt in the company. And that's why we believe in a fast churn, of the projects. So as far as the mid-income housing segment is concerned, I think supply numbers are still not so large that, the demand, it is overshooting demand.
Okay.
So that's why, we stay fairly bullish and positive on this business for a medium to long term perspective.
So, Rajat, quick question. What is the new guidance in terms of bookings that you will be able to achieve? You said 20-25% is not something that you can do anymore. What is an achievable growth guidance from here on? And is it the reason why you're foraying into commercial real estate as well, to keep a balance? Because now residential real estate mostly is saying plateauing or slowing down of growth.
So I won't say it's slowing down, but yeah, I think it's just very, I think particular to our situation that we've like grown very fast over the last 3 to 4 years, and we are seeing this as a steady year. Normative growth from the coming year is something which is very much on the cards. The intent of diversifying was that, see, the idea is to really uplift some of the communities, the micro markets where we are doing so much of housing development. And we already had some very good land parcels on which commercial real estate development could have been done. So that is the starting point. But this partnership kind of happened in a very complementary way, that Signature Global does understand the local land related nuances very well. Project execution capability is strong, whereas RMZ comes in with very strong project conceptualization and leasing capabilities. So it seemed like a win-win for both the groups, and hence we decided to set up a platform. And this particular project, which is significant in itself, of about 5.5 million square foot of leasable area, is acting like a starting point. But the intent is to grow up the venture into a much bigger, partnership.
So when you say that, Rajat, just quickly leave us with some guidance for the commercial bit. How much are you expecting it to possibly be as a percentage of sales, say at the end of FY27? And what is the pipeline of projects that you're anticipating, say, going into FY27 for commercial?
So see, commercial is being done with the intent to, create yield assets and not to sell these assets. So we can only give guidance around the kind of capital value which, the portfolio is expected to create once these projects are completed. So as far as the first project where, we've initiated this partnership with, is about 5.5 million square foot, which will comprise primarily of office spaces, but will have retail spaces in the form of a design district, or 1 or 2 hotel projects as part of this development. As far as this particular project is concerned, which may take 4 to 5 years to complete, is expected to have a capital value close to 15,000 crores once it's completed. Of course, certain amount of hard costs will have to be incurred for the project development.
Take that point, Rajat. A lot more questions, but we are completely out of time. But thank you so much for joining in today with your perspective on what's happening with residential real estate and that new foray into commercial that the company has made as well.